Yeah, let's move on to Tesla. Big day tomorrow. Earnings tomorrow. I see people tabulating, all the estimates, and the estimate we have is it was $1.20. What was
I
it?
think we're
$1.
$1.32,
Dollar
if I'm not
32.
mistaken.
Yeah, $1.32. So it's sort of at the high end of what a lot of people on these charts are showing of all the Tesla Twitterverse people, though, right?
Yeah, so it's kind of interesting. When we were going through this last week, we said, we're kind of sticking our neck out here because I think at that time most people were like around the $1.10 sort of range.
Hmm.
Um, but a lot of Tesla Twitter analysts have come out in the last week or so with estimates in like the $1.20 to $1.30 range, somewhere like that. So we're still on the high end, but not nearly so much as it seemed like we were last week. But it's
Hmm.
kind of interesting because historically we try to be like, what's like our, if we think of Tesla's earnings as like a probability, like a bell curve, and like
Hmm.
what's the where do we think they're going to end up? We always try to go for like the middle. We don't try to be conservative and have them be. We don't try to be aggressive and just say, oh, we think the Tesla's going to go to the moon after this earnings report. We really try to get right in
Yeah.
the middle. And when we're going through all of our assumptions, we think the $1.32 is right in the middle. Just so
Yeah.
happens that puts us on the high end this time, which is really unusual because we tend to be, I would say, more towards the middle of the Tesla Twitter analysts
Distribution. Yeah.
distribution. Yeah. So it'll be interesting to see. We did change the
Yeah.
methodology a little bit this year to kind of get a little bit more, or this quarter, to get a little bit more granularity on the cost of goods sold buildup, like we walked through last week.
For the regions
So
and stuff. Yeah.
for the regions, yeah. So I think that's an improvement in the overall methodology, but it could be that we've got something off there.
Yeah, yeah. I think our focus on China, being much more efficient has led us to this higher number than everyone else, which, I think at some point you got to break it up by factory and say, okay,
Yeah.
we all know Fremont is the least you have to, everyone should know that Fremont is destined to be the least profitable factory. And then you have Giga Shanghai, which is probably, we think it's arguable, but we kind of think destined to stay the most cost effective because Chinese efficiency, labor, hard work ethic, and all that. And it's still far advanced and they can continuously, but you can make the argument that Giga Berlin or Giga Austin will be more cost effective because of newer manufacturing technologies. But I'm not sure that is big enough. And I think that it's marginal. I think China Giga Shanghai has among the best manufacturing technology within it too. So, they have some giga presses there, don't they, at Shanghai now, and they're running those and stuff.
Yeah, I
So
think they
it's
do. Yeah.
yeah.
So
So
you've got that
yeah.
and higher throughput, and so as we were looking through it, the kind of Q1 cost of goods sold compared to Q3 was really more important. So it's you're trying to estimate, okay, how much does the kind of improved throughput in the factory, so like the improved output Q3 over Q1, how much does that lower your cost of goods sold compared to the inflation that we've seen this year? How much does that increase? And
Mhm.
trying to estimate what that is on top of the Berlin and Austin ramps is pretty tricky. But we went through, and like I said, we're not trying to be conservative or aggressive, so we wouldn't really change anything. Just because it looks like we're on the high end right now. We like our numbers. We think they're about right. So if we're wrong, we'll
Yeah.
adjust. But we're comfortable kind of keeping them where they are right now.
Yeah. And last quarter, there was that big variable, the Bitcoin impairment that no one saw coming, or that they sold a bunch of Bitcoin. No one saw that coming. Um, and then this quarter, you don't have, and I don't think most people are putting in the potential of the major deferred revenue credit, right? Or I mean, there's always potential every quarter going forward that they're going to take a huge chunk of. I think we touched base earlier. You said it was like a billion and a half of deferred revenue, and they could take a big chunk of that, which could be up to maximum of 50 cents per share around that if they suddenly did it this quarter. But there's this potential, one of these quarters, there's going to be a chunk of that recognized, right?
Yeah, and so I think it's closer to like 3 billion in overall deferred revenue, but for the
Hmm.
deferred revenue that's actually related to full self driving, I think that's about 1.5 billion. So yeah, they're going to recognize that at some point. I had initially been thinking they'd recognize it in Q3, but it looks like the rollout didn't quite go as wide as maybe we might have thought. So
Yeah.
in Q4, like if all of North America, anyone who has FSD gets beta, then I would say yeah, it's going to make sense for them to recognize all of that deferred revenue for those customers at that point. So that's going to happen at some point, but I think analysts are going to back that out, probably
Hmm.
rightly so, because you've got essentially like the last 3 years worth of FSD sales, even longer
Yeah.
than before that, kind of just piling up on the balance sheet, and it's just going to hit at one point. And so analysts will back that out. It'll be like this huge gap earnings thing, but analysts will back it out. But then the thing that I think a lot of people don't think about going forward is that future FSD sales are going to be fully recognizable, at least in those geographies where it is fully recognizable. So there
Yeah.
is an ongoing margin improvement going forward. And I don't think most analysts are actually modeling that out in the detail that they should be.
So that's probably one of the biggest unknowns, hardest to model when it's going to happen, when it's going to hit, and the actual headline number, even though it'll be backed out, But the other, I would say, would you say the second hardest unknown to predict by anyone is what we call the phantom asset of the regulatory credits buildup they have that they realize this quarter? And is that probably the second hardest thing to predict?
So
Would you say?
that is, I mean, it's the I would say 2 years ago it was a much bigger. It was certainly like a bigger in terms of like the percentage of revenue or and especially the percentage of margin that it contributed towards. It was much more impactful. So
Mhm.
as Tesla's automotive revenues have really grown, the regulatory credits have stayed roughly flat. So that kind of tells us that they're getting lower pricing on it or just selling fewer. So it's becoming less important, and a lot of analysts kind of back it out anyways because they don't think it's going to stick around in the long term. But yeah,
Mhm.
it's like really hard to forecast. So I think we're modeling 350 million this quarter, but like they could just come in at 700 million or something like
Yeah.
that, and then you've
Yeah.
got no way of really knowing how they're going to do it.
Yeah. So maybe we should
Um,
like do a post. We could do like a post analysis of saying like, let's back out the regulatory credits and back out the deferred revenue if they end up doing that and see how close we were. That's probably the best way to figure out how accurate our model is. I would say, right? Because those other things, no one can predict those other two things. Really, it's just it's a roll of the dice. Really.
For the most part, yeah. I mean, you got to guess something.
Yeah.
And the other thing to keep in mind too is I think James Stevenson. I don't know if he's looking at Q3 or Q4, but there's this deferred tax asset as well, which could be like $1 billion or even more that gets recognized. That one will definitely be a back out. So,
Hmm.
and it's
But
not
it'll
like
be a
cash
headline.
flow
It'll
based,
affect
so
the
there's
headline number, though. Yeah.
well, it will, but I think it might even diminish it. So like let's say Tesla hit our number of like $1.32, but then on top of that, there was like $1 billion of, this deferred tax asset recognition or something like that. So then it got to like $1.70 or something like that. That would,
Hmm.
to me, kind of like take a lot of the steam out of the beat because it would be like, oh, Tesla beats on earnings, but it's mostly related to deferred tax asset, and it's
Yeah.
like,
Yeah.
well, if they just post like $1.32 cleanly with like, no huge amount of credits and no huge amount of like deferred revenue or one-time items, I think
Yeah.
that's a much like it's harder to poke holes in that and make the narrative, that, oh, Tesla's just, doing these gimmicky accounting tricks.
Yeah.
So
Yeah.
I'd almost prefer that they don't have anything weird like that.
Yeah. One thing real quick back on the regulatory credit stuff that's unknown. I remember back in like 2013, 2014, 2015 when the regulatory credits were much more important to Tesla's survival back then. And so on like the Tesla Motor Club's forums, there'd be lots of, deep analysis on it. You get some people that were like real specialists giving their analysis on it and stuff. And I think we determined collectively that there were certain quarters where the demand for them were extra high because the other car manufacturers were not producing enough compliance cars and they had to catch up
Mhm.
to meet the requirements that they had to meet in order to not be to be able to continue selling cars in California or whatever it was. And so those particular quarters to meet those like deadlines, they would have to buy up a bunch more credits from Tesla. And so Tesla would have certain quarters where it wasn't consistent for that reason we determined. So I wonder what those
Mhm.
quarters are now and if that still applies and if this is that quarter or next quarter is that quarter, if that kind of strategy still applies to the other car manufacturers that are trying to get enough credits to meet their compliance requirements.
Yeah, I mean, I think that does still generally apply. The math of this is really complicated, and frankly, it's not worth tracking in my point of view in that level of
Hmm.
detail. Um, but the whole Tesla Q thesis from back then was, oh well, I think it was by maybe it was 2021 or 2022. They had all these announcements of like, GM's going to have 30 new EV models or whatever they said they would
Yeah.
have at the time. And,
Yeah.
Volkswagen's going to have the ID3 and that's going to, dominate. So the thinking was like all these companies are going to have enough kind of internal production of vehicles that, meet the compliance requirements such that they're not going to need to buy these credits anymore.
Mhm.
That has not happened. Those vehicles they're contributing toward those OEMs totals. So that is lessening the supply or the demand, I should say, for the credits to some degree, but it's not like there's zero demand for these anymore, like a lot of Tesla Q accounts were saying. So
Yeah.
how long these stick around and at what price kind of remains to be seen. But I think we're just assuming roughly 350 million for the foreseeable future, 350 million
Yeah.
per quarter for the foreseeable future.
Yeah, we don't know which quarter is gonna be, 700 million, which one's gonna be maybe 200 million, or I don't know, it's just hard to say. So we're just kinda averaging it to that for now, conservatively. Um,
Yeah.
and then, I guess what are you looking to hear in the earnings call? I mean, Elon confirmed he's gonna be on the call. That's good. Well, it's good because I always like
Good
to
or
hear him
bad, I
talk
don't
about
know.
it's good or bad. Whenever he's on the call, he messes things, or he chooses to be on the call when quarters are tough and Wall Street interprets it roughly versus when he chooses not to be in
Yeah.
the call, he knows it's a piece of cake for Zach and Drew to
We could
answer
end up with
questions.
like 15 minutes of nuclear war talk, which I don't think will be particularly helpful for the
Yeah,
stock. So I think
yeah.
for like some people would be like, we might feel a little more comfortable if it was just Zach and team on there. But
Yeah. Yeah.
yeah, no,
What if he goes on, he's like, "We've made a change of name with, we're gonna change our company name to Skynet." And they're like and they're like, "We're gonna focus on the bot, and it's gonna and our company future is gonna be called Skynet." Like, that seems
yeah,
like
and
the direction
we're
we're headed
going
almost.
to overthrow the gerontocracy.
Yeah. Yeah. With ageless computers.
With
So
ageless computers. And if you're an able-bodied 30-year-old, you can fight the bots, but if you're feeble and 80 and still in power, you will be overthrown.
yeah, by the ageless AIs. Yeah. So, what are you looking to hear on the call tomorrow? Anything you're particularly kind of there's a say.com questions. I went through those. Did you go through those yet? The top like several ones. I went through them. There's some good ones. I'm surprised that all the discussion about share buybacks, I'm surprised that wasn't voted higher to one of the top like 3 or 5 questions. When I saw it last night, it was like number 10, or I don't know if I don't even get addressed officially then. But did you have a chance to look at any of those questions, or what are you looking to hear being asked? I'm curious.
So I forgot about those. So no, I haven't gone in and looked at them yet. I'll take a look after this call.
Yeah.
I think what I'm curious about. I mean, I think there's kind of two things that I would really like to get some guidance on. One would be kind of Q4 deliveries. There's been a little bit of, I would say, some kind of Tesla Twitter back and forth debate around the Troy Tesla like numbers. He's expecting only 400,000 deliveries in Q4,
Hmm.
essentially related to a lot of cars being left in inventory, left in transit at the end of the quarter.
Hmm.
I think that's kind of an unrealistically low delivery number. I know we're ending the wave and all that sort of thing, but a lot of people think, oh, the sky is falling with demand and that sort of thing, or just that this wave is going to result in much lower deliveries than people are expecting. And so if we could get some sort of guidance on like the delivery wave and why they're doing it and the cost savings that they're seeing from it, and kind of if they hit any sort of indication on what they're targeting for Q4, I think that would be really helpful. The other thing I would love to really hear them dive deep into is the Inflation Reduction Act. So this is something that, I think we were all over like a month ago about all the kind of goodies that were in there for Tesla in terms of like tax credits for their energy business, the both stationary storage and solar, as well as the tax credit for their vehicles. Obviously, this is only kind of U.S. centric, so it doesn't impact the entire business. But the dollar values that we're talking about are so big, and I really think, especially with the stock price fall that we've had over the last month, I don't think Wall Street really understands at all the potential impact to Tesla. So if they could kind of give an overview of that, I think that could really be a potential boon for the stock if they were to go over some of the opportunities that that's creating.
Yeah, absolutely. And yeah, the Troy Tesla like 400,000. I mean, he's really sticking his neck out on that one, far from the pack of everyone else, and but he's got a lot of information and he's got his viewpoint, and I'm glad he's going with what his analysis that he believes shows, and he's putting that out there now, even though he knows it's far away, for it's just unpopular and far away from what everyone else is suggesting. So if it turns out to be Troy is right, I'm skeptical. I don't fully trust that right now. Like, to be my intuition and everything I know says it's 450 plus for Q4, maybe 440 plus. But if it's closer to 400,000 or possibly below or whatever, then I'm gonna have to give Troy props and be like, he's
Yeah,
very
for
high
sure.
signal versus noise, and I should just be listening to him going forward, even if it goes against my intuition. So it is a big, a big point for Troy, a big time for Troy to put that out there right now. So we'll see what happens. He's got a lot of it. He's probably, arguably, he's got the most analysis of anyone tracking this. It's just a matter of how he's interpreting it, or conclusions, inferences he's drawing from all his analysis, and how he's putting it, compiling and putting it together. Is he accurate or not in that estimate? He's not pulling that out of thin air. He's got reasons for putting that out there. So we'll find out in time. Maybe we'll get
Yeah,
an
yeah,
inkling to it on the
definitely.
call tomorrow. Yeah.
But I certainly appreciate that. Like you said, he's willing to stick his neck out there, and I mean, I think there's a real threat that you can all have, kind of what's that fallacy where you just bunch together because all people
Yeah.
like. Sorry, my brain's a little slow today, but
Yeah. We all
you
sort
don't
of
want to
just
just like consensus bias or whatever
hysteria
it's
or
called.
whatever. Yeah, yeah, yeah. There's biases. Yeah, but we're all kind of crowd just feeding each other's bias on
Yeah,
it. Tunnel
yeah.
vision.
So you definitely don't want that, and I appreciate that he is willing to kind of stick his neck out in that regard. But to me, when I'm trying to like, okay, maybe he does have a point here, but when I start thinking through the logic group think that Mike says, thank
Yeah,
you
I
guys,
see. In
a
Nick's corner.
little too
Thanks,
slow
guys.
today.
Yeah, yeah,
um, but yeah, no, it's helpful, but I just don't really agree with the conclusion. So we'll see. It's helpful to as you get these sorts of projections, just see as the actuals come in, and then you can kind of if you use that to then improve your own forecasting methodology, you should get more and more accurate over time.
hmm
And that's something we try to do here at Good Soil too, is to whether we're high or low on something, incorporate that feedback into our models and into our
yeah,
kind of thinking, try to get closer to the truth.
yeah.
I'm curious for you, Emmett, though. Anything that you're looking for in particular on this call that would be something either you're curious to know or you think would be particularly helpful for the stock or for the investment thesis?
Well, number one, what's going on in China, right? Put those
Mhm.
demand rumors to rest, or whatever it is. If there is demand pockets that are, acknowledge it and see how he talks about it. Um, I saw Farzad put a funny comment earlier where, like, Elon might lead the call talking about, if we're not here, there's no demand to worry about. We have an existential threat with World War III nukes going on. Like, he might lead off with like a soliloquy of 10 minutes talking about World War III or something. Who knows?
I
But
know. Yeah, you could just hear his voice be like, "Well, if the world ends in December, then we won't sell any cars in Q1." Like you could
yeah.
totally see him just doing that. I'm like, "No, don't, Elon, please."
Like, he might not intentionally set out to do that, but he might like creep into his, he's got no filter. And I love that he has no filter. And these are things I worry about too, to be honest. Like all these tweets of like nuclear threats, and we're talking about Tesla earnings tomorrow. Part of me is like, why do we even care about Tesla when the world's about to blow up? So Elon probably has that mindset too a lot of times. And so if it comes out tomorrow, it'll be a big downer for the stock probably. But what I'm looking to hear is, what's the demand and order backlog stuff like, and there is a global recession going on, and so that's lowering demand. But is Tesla, are they seeing, um, are they do they what levers are they planning to pull if demand gets lower? The other big thing I'm really looking to hear about is anything about the Cybertruck. They announced that semis are coming, but there was that suspicious picture that leaked on social media and Twitter the other day of like the two Cybertrucks under wraps, like, and Elon even acknowledged it, like, "Oh, you can't hide these" or something. I don't know, but I'm not sure if that's a breadcrumb that like more to come on the Cybertruck, and it would almost make sense if he sees a global recession coming into next year where demand is softer, that maybe he's going to accelerate the production of Cybertruck, versus what he thought before. So it's almost possible that maybe he'll say something like, "Yeah, we're planning to start deliveries in Q1 or something, initial deliveries, and ramp up as the year goes on." It'd be really crazy if that happens, and that's, I think, a plan they could do, if they do see, a global recession impacting demand for the next 12 to 18 months, for example. They could just ramp up supply of the Cybertruck because there's plenty of people that want that.
Yeah, I don't know if they could do that. I mean, I think that Idra Press that was just in the news, that
Yeah, the
new
one for the
Giga Press, I think
Cybertruck.
that was for the Cybertruck. So I'm actually
Yeah.
kind of surprised that that's ready already. But in talking to a couple of people in the supply chain, to me, they were thinking middle of next year was very hard to meet anyway.
Mm.
So of course that's just anecdotal and could be wrong, but I'd be surprised if there was anything more than, like, I don't know, a dozen Cybertruck deliveries in Q1. I mean, maybe they've already made what, like, at least half a dozen of them, it seems like, just from the pictures we've seen. So they're probably like hand building those, and they're like, prototypes of some sort. So maybe they
Yeah.
deliver some small amount of them off of like a pilot line or something like that. But to me,
Yeah.
I wouldn't expect it to be kind of meaningful until like late Q2 at the earliest. But I'd be happy to be wrong on that. They've surprised
Yeah.
before. Like Model Y was remarkably quick.
Yeah, yeah, and the original, I think the Model X was notoriously late, but the Model S, that came like on time or like a month ahead of. So every once in a while, there's like a new model that is on time or even ahead of schedule slightly. But the Cybertruck, yeah, I mean they've been building these prototypes for like years, and
Yeah,
you got to think they've been planning for when they want to turn I think they were delaying until they could have started their Cybertruck production by now. I think that was the original intention, but the demand for Model Y was so high. Remember, he said, like, there's no reason for
yeah,
us to introduce new models when we don't have enough to meet demand for Model Y for so long. And that was like a year ago, exactly, almost, when he was talking about that, or maybe 9 months ago before, and but now, recognizing that maybe demand for Model Y is not as endless as they thought with the global recession, maybe they recognized that a few months back, and they've already started making plans to like figure out how to get the supply going of Cybertruck 3 or 6 months earlier than priorly they planned or something. That's one guess. I'm looking for any kind of ways to read between the lines on that. I mean,
yeah.
I don't know
Wh-
but
What
yeah.
what do you think about semi? I mean, that's actually going to hit this quarter. We're going to have some actual sales of semi in Q4. Do you think we'll
Yeah.
get any guidance on like targeted volumes for that, like in Q1 and beyond, on this call?
Yeah.
Or and if not, like what's your expectation? I mean, that's a hard one to forecast. It seems like to me.
Yeah, it's so hard to forecast. I think the semis, like, I'm thinking these big giant trucks, like, they're gonna deliver like a few hundred per quarter at the most, is like what I'm thinking anytime in the foreseeable future. So I don't think it's
Hmm.
gonna move the needle on earnings. It's kind of exciting because you really see semis, but maybe in like 5 years, when there's more mass adoption of the superchargers they need and all that, then they'll be producing thousands, maybe 10,000 a quarter or something. I don't know, not even like hundreds of thousands. I don't think ever. I could be wrong, but to me, like, the semi is great for getting less carbon emissions out there, and it's great. Maybe they can sell them at a higher premium as time goes on to get even more margins, because first they have to prove, I think, the business model a little bit with these first orders to
Yeah,
PepsiCo and others, that, like, hey, this thing is legit. It's going to save you, $100,000 per year in fuel and dry, whatever. So I think once they kind of prove the business model for a year or two, they can maybe raise the prices and make it more autonomous, for example. So this is a good start. I just don't know if it's going to have any near-term impact to the fundamentals of Tesla. What do you think?
yeah. I mean, they're definitely going to be small volumes at first, but it does seem crazy to me. I mean, like, look, running the numbers on the upfront cost plus like the fuel savings, and maintenance savings. It's
Yeah.
wild how like the internal rate of return that a PepsiCo should have on these if they perform as advertised.
Yeah.
So like I wouldn't be surprised if, like, we get 6 months or so of initial performance, and then like the price doubles or goes up by 100,000 or something like that
Yeah.
on these, because it doesn't make sense for Tesla to give all that cash flow upside to like to the customers. So I don't know. I'm curious to see how this unfolds, because I think this could be really, really impactful down the road. There's a guy actually we're going to have on the channel in, I think it's a week or two. We're doing a Tesla Energy Roundtable, and Mad Manx is his name. He did a great tweet thread about a month ago about Tesla semi potential, and it's like wild, the margins when you start thinking about it. So I'm really excited for this. I know Fresh Jiva also, Mayor Thaker it's like he views it as one of the most important products in Tesla's whole portfolio. But I think it's just been
Mm.
delayed for so long that like we kind of tend to think that it's not that big of a deal. But it wouldn't surprise me if we get, to this point next year and it's like, oh, like Model Y is nice, but Cybertruck and Semi are really where all the margins are made. So
Yeah.
I don't know.
Yeah.
I'm just so optimistic when I start thinking about like what does 2024 look like, and even
Yeah. Well,
2023 is going to be wild.
I wonder how many semi trucks there are. And if anyone in the comments knows, I wonder how many there actually are. So, like, what's the total amount of semi trucks in the United States, for example? And that's how many they could at most replace. Actually, they could replace more than the current amount of semi trucks. They could probably produce a lot and sell a lot more, because they could completely make rail service obsolete with the semi trucks if they become autonomous and they're so cost effective. There could be like double or triple the amount of semi trucks on the road driving autonomously, much more cost effective than, transporting by rail. Lots of stuff.
Yeah, so far as that says 15.5 million trucks in the US. So I think the
Mm,
like if you do some rough math and assume that they're turned over like every 10 years, that would assume that there's like 1.5 million sold each year, something like that. So, but yeah, about
mm.
2 million, as far as that says, sold per year.
Wow,
So,
that's a lot more
that
than
gives
I
you an
thought.
idea of the market. And so, like, if Tesla gets, even just 10% of that, which if the specs are as good as they say, like, it should be a lot higher than 10%.
Yeah, that's more than I thought.
So
It could be a big deal. Like, maybe Elon gets on the call tomorrow. He's like, "Yeah, we're really ramping up semi. We plan to produce, tens of thousands by middle of next year per quarter or something." I don't know if he says something
yeah,
like that. That would be exciting.
charging is a serious constraint, though, because it's like you
Yeah.
need something a lot higher than a V3 supercharger. I think I was like doing the math, and it's like you actually need it might be like a megawatt draw, something like that, in order to
Hmm.
turn the vehicle around. And so like you need like step up transformers and a lot of like highly
Yeah.
capital intensive stuff. So but then that's when you like, if you tie it back into the IRA, and we'll get into this in our energy roundtable that we post in a couple weeks here. But then if you imagine the original vision for all these supercharger stations is that they'd be like solar based, with big battery backup. And so then if you get solar tax credits for the solar on these superchargers, plus tax credits for the battery, plus like highly margin positive business um, on just like your selling your semis. It's like the potential for them to both undercut utilities and make a huge margin on your energy that you're selling at these supercharger stations, and make big margin on the semis. It's like, it's wild, but you have to actually go through the math to understand what a huge opportunity this is. So
Hmm.
I'm really excited about that, but it's going to take years probably for them to build out all that infrastructure.